September 21st, 2020. And as always, we start with our little disclaimer here. Remember what we're doing here. Oh, come back, disclaimer. Remember that what we are doing here is for informational and educational purposes only. The markets were going down today. So if you look at the SPY, it has been tanking since a while because of the tech sector moving downwards. I will change a little bit this view here, the perspective, so you see it better. Remove some studies. Oh wait, this is good. I don't want that. I don't want NRSI and implied volatility right now. So you see markets gap down here today, and they've been tanking for a while. They flagged a little bit here, dropped below 20-day moving average, then dropped below 50-day moving average, and now going towards 200-day moving average, correcting a lot. And this looks very bearish to me. This looks like a correction. Also the VIX, if you look at the VIX today, it has jumped like crazy to the levels of 30s, right? 16% up today, or 1796, even 18% up. That's a huge jump, means markets are very scared. And what are they scared of? Well, let's have a simply look at the news, what's going on here on the briefing.com. When you look at the portfolio here, it's beta weighted against SPYs, so we can look at all the Greeks now. And you can see that we're slightly bullish still. Why is this number so high? Well, because of ExxonMobil. We're going to talk about this. This looks like the biggest loser in the portfolio, but I will show you that that number is not really what it shows here, and this is also reflected by the overall PL year to date, which is not that bad. So we are slightly bullish because of Exxon. We would be much less bullish if that Exxon position was not here. We own stocks, so we own 1,000 shares, which brings that delta to this higher level. Then let's look at theta directly. We're having quite high theta, 360, meaning $360 per day, more or less. So it's quite decent. Where does it come from? It comes mostly from sold puts and calls on different positions that I have here, and mostly NEM. So it's gold mining, and also I have here and ExxonMobil, quite high theta, and as well gold. So gold, Barrick Gold, which is also another gold mining company. Disney dropped. It's a butterfly. It causes a little bit of pain, $70. But again, if I look at the chart, it's a gap down. Its 200-day moving average is at the level 122. It's a huge support zone. I think it's going to bounce. It may fill that gap, but I think it's going to bounce and come back to levels of 126, something like that. Unless naturally markets are crashing, then it's not. If it crosses this 200-day moving average, I will be getting out of this position, or changing the bias of this position to be more bearish. So very good thing about broken wing butterflies is that you can adjust them very easily and convert them from bullish to bearish, and that I could do when it crosses this level. And how would that look like? I'm gonna just show you. So again, let's have a look at risk chart. So let's say we're sitting here, right? These two calls at the head of the butterfly, these ones, are winning now, right? Because these are the ones which are out of the money and they are generating us our profit, and they're winning, and they're quite far away from the price level at which we are right now. So for Disney to get there would take a significant effort to pass that level for those calls to be dangerous for us. So these are winning calls. What I could do is simply roll them down a little bit in price, and just convert this trade into a little bit more bearish. Right now it's a bullish trade, so you see if price moves up, I'm making money. If it moves down, it's losing money. But if I would see that there is no chance for Disney to go and somehow in this direction and get the levels of 130s or 135s, like zero chance in the upcoming, how many days do we have in there? 60 days, so 2 months. Then I could say, you know what, if I have still 40 or something like days to expiry, or a month, I could convert this to be a bearish trade. And how would I do that? I would just go back to the trade.